Welcome to Thoughts and Discourses on Digital Transformation. Dive into a world of insightful conversations and profound ideas. Join us as we explore the latest trends, challenges, and opportunities in the digital age. Stay tuned for engaging discussions and expert opinions that will inspire and inform.
Okay, welcome back to another episode of Digital Transformation, and I've got a special guest today with Beatrice. I've known Beatrice, we've known each other, over a decade now. Our first meeting was probably over a decade in New York. So, Beatrice, you want to introduce yourself and what you're doing? And today we'll start talking about AI, and if we get a bit time into tokenization.
Thank you, Colin, and thank you for having me on your podcast. So I'm Beatrice Lyon. I ran True Global Ventures together with my partners. It was initially initiated with our founding partner, Dusan Stojanovic, who did a lot of successful exits, most notably his 3 exits in 10 days, all in payments. And now today we run venture capital fund. We invest in the early stage across AI applications and blockchain technologies. And that's where we are most excited about. Happy to share a little bit about Investment Thesis and also our fund that we are deploying out of, and some of the most exciting companies that we are also invested into today.
Okay, great. So speaking of AI, right? So what sectors within AI are you most excited about? Is it the infrastructure, which seems to be getting all of the news and a lot of the capital, or any other areas? And where are you seeing the most compelling opportunities, and why?
Yeah, so we focus a lot on the application layer, and specifically also some of them incorporating tools with agentic AI coming in. We don't invest into infrastructure or large language model because in terms of horizon, in terms of the deep pockets, that's not something that we play with in the bandwidth. And so we focus a lot on application layer. In terms of vertical, where we look at the entire category as future work in the back office efficiency, anything that drives productive efficiency there, whether it's compliance AI, legal AI, quality assurance AI, tax AI, for example. That's something that we put together with the back office productive efficiency. Middle office, we look at coding AI, cybersecurity, so like no code tools that will fall under this bucket. And then on the kind of front office side, we look at anything driving revenue AI, marketing AI, driving top line revenue growth, tools that helps to get productive efficiently there. And also, interestingly, the intersection between AI and blockchain, which we'll come to a little bit as well. Some of the most compelling opportunities, I would say, happens to be the most boring ones in some ways. So we have done quite a bit in the kind of legal AI, compliance AI, things that people don't want to do, replacing menial labor or co-piloting together with manual labor that's been, they don't want to do the boring stuff. So that's where the AI tools comes in. So that's some of these that we can cover as well.
And so a lot of the companies that you're looking for, is this really about driving a lot of efficiency? You talk about complementing manual labor, and in these times, right, it's probably mostly very expensive white collar labor that you're talking about. Is that really where a lot of the AI is being applied?
Yes, I think what we are focused a lot on is not that AI is going to replace the human tomorrow. It's really that the human that is actually using AI is going to replace one that is not. So that's the kind of thesis when we invest into AI applications, and the cost of subscribing to an AI tool, or the cost of the function that you're basically replacing, is actually coming from the productive efficiency, where it makes sense from an ROI point of view that you're not just testing this because it's an exciting technology, but you actually get value of it, and then you're paying for that in terms of subscription fees. So a lot of times the clients or the buyers of this AI application, they're always measuring what's my ROI for paying for the subscription, as opposed to doing it with labor. And this more expensive white collar jobs, which comes into play because they are more expensive by nature in terms of labor. So I have more cost savings if I can get a certain white labor collar worker to do more within a shorter period of time. I can get more projects. I can be more efficient about it. It's not to replace entirely. It's really to complement. And then you start seeing companies that and AI enabled themselves being able to take on more projects faster, and they're winning the competition compared to those who are only relying on traditional means of doing so. So that's where also comes a competitive advantage as a result of that productive efficiency.
And so, how has your investment thesis with AI evolved over the last 12 to 18 months? Because we are definitely in the hype cycle with what AI can do, and I think there's just going to be continual improvement. So how has your thought process with investment changed?
Yeah, I think one of the pieces that when we look at deals, we are always concerned about is what is your moat, right? Because AI is developing very quickly. Every time a new large language model, new version is being launched, they're better at doing certain things. And does that make the company that we invested into become obsolete? I mean, the whole classic example of, Jasper AI doing very well until OpenAI came about, and then all of the marketing needs are serviced with ChatGPT. And then do you really need Jasper, for example? And then they have to innovate, they have to pivot. So when we're investing into this company, we're always looking at the data moat. And how I see it is probably two areas. Number one, on the proprietary data side, is there a way that you're always continually training a machine with proprietary data better than anyone else has done it, or better than a large language model, just because you're so specifically within a certain vertical or within a certain niche? The other way of looking at it is also in terms of creating a moat just because you're so vertically integrated within a specific vertical that you can't actually get out of it. So one example is the company that we've done in the marketing AI space, you would argue, but marketing AI is so easily disrupted with OpenAI and ChatGPT and Anthropic and Claude that are getting smarter every day. But the key part is the nuances that you're able to vertically integrate yourself, in their case, the life science industry, so deeply that you can take in the jargons. Your machine is better used for the jargons, and you can also be HIPAA compliant, for example. So all of that adds to that moat that all these clients you have are sticky with you because they refuse to use a generic product when they have something that is better tailored for their industry.
So what AI startups in your portfolio are that you're looking at are tackling problems in new ways versus just automating existing problems?
Yeah, so I think one of the areas that I like to cover is kind of the disruption in the area of when you're looking at replacing the manual labor part. So when it's not the kind of most, I would say, novel way, but it's basically the disruption of professional services. And the way to grow very quickly around it that we like is that they are looking at buying their clients. So I'll give two examples here so to illustrate a point. So one example is a company we invested into that is targeting the insurance broker space. So typically your insurance brokers, not your carriers, but the brokers themselves, these insurance agencies, there are about 50,000 of it in the US, for example. And these agencies will rely a lot on manual staff to actually address the queries from the clients. So you have a lot of emails, you have a lot of calls, and a lot of change requests, for example. And one of the areas that this company is targeting is that they created a platform that allows to automate all of that calls, email, change requests. But on top of that, they're not just looking or focusing on the platform growth. They realize that, hang on, I understand my clients, this insurance agency so well that why don't I just buy up the entire insurance agency? I can basically leverage on their client books. I know how to farm the books. I know what their net retention ratio is. And of course, you grow quicker as well because it's not just organic growth, but it's also inorganic growth through acquiring your clients. So this is one of this roll-up piece that we really like in a I would say. And another area in this is actually a tax company doing the same thing. And to cover that, why that's so interesting is that this company is basically using AI to help with filing taxes for small, medium enterprises and individuals. And this is the underserved portion because all these small medium enterprises, they're not going to be able to afford your Big Four, your EYs, your PwCs,
Right.
for example, or your Eisners. And what they're able to actually come in with is that they're replacing retiring chartered accountants or your CPAs. They're retiring and they buy their clients. So from day one, imagine a company without needing to have a sales team. You actually acquire them purely inorganically. So that's a novel way that we really like in terms of the the playbook, because we see that growth. Why do you need to spend time on a sales team when you just buy it over from retiring clients? It is a problem, because then what is happening is that all these retiring CPAs, they don't really have someone to pass it to, because the next generation of tax people who help you with your tax, they are joining these big organizations as opposed to running their one man, two man shops. So
I
that's
think
also another area.
that's a whole separate podcast on how what do we do with retiring executives and how do they handle their whole business, especially if they have family members that are not interested in doing that. So I think that would be a whole separate conversations. But what's an underrated use case that you think, if you were going to do a startup, that's going to be a breakthrough on the next year to 18 months that you think people should be focused on or people aren't talking about enough?
I think there's like one company that I really like, and what the company is doing is basically they are looking at a lot of data from the rental deposit space. So basically, they remove the need completely for rental security deposits. And how they're able to do that, and here's where the AI tool comes in. So there is a lot of data that's being used. With today's world, you have the open banking API, you can plug that in, and there's also a lot of existing data from renters who've been renting, almost their whole life. And in that data, you can actually price such that I can understand whether he's a bad actor, he's not going to be paying my rent in a couple of months, or he's a good actor and he's been consistently having transactions in and out of his bank. He's been in recent transaction, not just credit history, but recent transaction, being a good player. So I do think like using data and that function is actually very useful. And what the AI tool comes in to do is that they can dynamically price this specific subscription fee that the renter actually pays instead of paying a rental deposit, with that small amount of subscription fee priced based on whether this person is a good actor or not, not so good actor. So this is just an example in the rental property or security deposit area, but there are many other areas that you can do that to dynamically price for individuals based on the certain characteristics, based on certain behavior and data sets that you have.
Given that you're in Singapore, right, how do you see the AI startup ecosystem in Asia different than those where I'm from in the US or where I came from in Europe?
Of course, undeniably, I must say that there's been way more capital being poured into US AI infrastructure. So a lot of more exciting companies and technology advantage does stem out of the US. But one of the areas that we're seeing in terms of maturity of the clients, in the US, the clients are way more mature. They are demanding. They know exactly what they want. They measure ROI. They are quite sticky with their products because they've already decided that this is the product that I've decided to buy and not build. And this is the product that I know has given me ROI. So I'm not testing it so much. Whereas I would say in the rest of the world, like in Europe and in Asia, we still see a lot of testing. And then the second piece is also the cost of labor differs across different jurisdictions, more so as comparison between Asia and the Western world. So when you bring that same product to the Asia, for example, the price point would have to come down because they're saying that, but hang on, I can just hire cheaper labor from so. I don't really need to use your product yet because, why am I paying a subscription fee higher than my cost of labor? So that's also another comparison that we see from a geographical focus. And the reason why we focus quite in terms of investment thesis quite globally as well is because we see that arbitrage that we can help a company, for example, in Europe, fantastic product to get into the US market, to serve the US market from a large market size point of view. And you have all of this also very ambitious American entrepreneurs that is not enough for a 200-300 million population. I want to target a 5 billion population in terms of getting outside of the US as well into major cities, major markets. So that's also the arbitrage that we do see, and that's why we like to keep our presence in terms of investment thesis across 8 cities. So we are in the Bay Area, New York in the US, London, Stockholm, Paris in Europe, Dubai in the Middle East, and Singapore and Hong Kong, so that we can help with our deep networks within these 8 cities with that geographical bridge, or in some cases arbitrage across our investments.
So look into the future, right? So what's the biggest gap that you see between what AI can do today and what businesses and enterprise actually need, right? Where's that mismatch?
I always feel like, I heard before Khosla from Khosla Ventures, obviously, Vinod Khosla saying a very true thing that I do agree with, and that is basically this was a year back at South by Southwest, and he was saying that AI is probably going to underperform people's expectations in kind of 3 years horizon and outperform people's expectations in a 10-year horizon. So I think the problem today is that we expect AI to be able to do everything immediately and now. So I think like in terms of that gap, probably that biggest gap is linked to expectations of what we are expecting to achieve. And then I think what enterprise actually need is also a lot of training. So even with like basic tools within the AI space, even in Copilot, like every engineer, and I know more and more companies are doing that, they're measuring what kind of percentage of my engineers are using Copilot in a certain form or equivalent tools, and that's basically where I feel what enterprise needs is that sometimes the tools are there, it's just about training, it's just about getting in your bench players to be as good as your frontline players, and I think that's basically a need that has to be solved as well.
Yeah, that's a huge problem, right? How do you get engineers to actually use the tools? Some people naturally adopt them, some people naturally resist them, and then how do you measure overall productivity? But as a VC, right, what's one thing that you wished AI founders understood about building a business, right? And what advice would you give them to the ones that are listening?
Yeah, I would say that one of the P's is to always be very conscious about competition. Given what is already in the market, how do I leapfrog that growth from maybe even an existing product? How do I build it better? And then that creates a natural defensibility because you're always conscious about what is missing in the existing competitor landscape.
Okay, so we're about out of time. So, Beatrice, any last thoughts that you have? Maybe you can summarize where you think the future is going to be with AI.
Yeah, no, I'm very excited about this future. I really want to be in this space at this time right now. I think, there's never a better time to be alive if you're very interested in investing into AI applications and in blockchain, because I do see that we're going to grow the next kind of generation of the Amazons, the Metas, or the Facebooks again right now, or the new Googles right now with the innovation that we have. And we're going to see more and more problems that are being solved with new innovative cases. So honestly, there's really never a better time to be really investing in this space and learning and being educated about it. So definitely excited for a lot of our companies and their potential in this market too.
Okay, well, thanks so much for joining the podcast this week, and look forward to talking to you and seeing you in person the next time you're in New York. Okay, bye.
Absolutely. Thanks, Colin. Bye bye.